what is the correct way to establish an LLC for real estate investors in various states for the IRS to consider at the tax level?
Okay. The best way is to open an LLC, as we said before, in each state.
Mhm.
Once you have an LLC in each state and you have two members in that LLC, it doesn't have to have a different name. It could be the same name in every single state. And in addition, you can also register the company, your LLC, as you open, let's say, in Texas, and then you buy property in Minnesota or in Arkansas, then you also register the company in Arkansas or in Minnesota, and it's going to give you, it's gonna register the company, it's going to give you that limited liability protection, because you are say that at a certain point you are legalizing your company, or you're formalizing your company, making it formal, the company in that state. Because unless if you want to do business in one state here in the US, you have to be registered in that state. You cannot. I've seen cases, for example, that people move from California to Florida, and they open a company here that is the same company as in California, but then they have two operations. They have one here and one in California, but they can close the one in California and have the one here in Florida. But at the beginning, from the beginning, when they move from California to Florida, they register the Californian company, they register in Florida, because that is required to do business. Now, once you have that structure, you buy in one state, two states, three states, depending on what is the strategy that you have and what kind of property you plan to buy. Once you have formed your LLCs, now the next structure is, as I said before, it could be another LLC, but it will be better if it's an S corporation. So S corporation is for administration. It will be the owner of all the LLCs. And then the LLCs are the entities that carry or hold, the entity that, say, 1, 2, 3 entities that hold the real estate individually. Do not concentrate in one single entity, all of the properties, because it is too much of a risk. And if you do that, it will be better if you get a good insurance, liability insurance protection, enough for any kind of liability that you may risk having in this business of real estate.